Hey traders, what's up? Jamie Saettele here. It is Friday, April 29th, 2022, and I'm here with the FX Power Hour, again with Scandinavian Capital Markets and SB Trade Desk. And it has been a pretty wild week in terms of FX. Well, I guess pretty much everything. Equities, FX, bonds. That's the big one for me. We're going to start, actually not with a chart, but with a little sentiment analysis here. So this is a post from last night. I follow headlines. The way to read the news is follow, the headlines look for very strong language, right? Everyone knows about the magazine indicator, for example. But when you look at headlines, you're looking for strong descriptive language, right? That indicates a sentiment extreme. So if we go to Google, right, and just type in US dollar, this is what pops up. Dollar is king. US dollar surges. Okay. Dollar is king's a big one. Yen tumbles. Dollar domination. That's a big one. We also had, I haven't seen this one before, turbocharged US dollar. So again, this is indicative of extreme sentiment, extreme bullishness, right? And when you get extreme sentiment, the market's in a very dangerous place, right? Susceptible to violent reversals. And we are, seeing somewhat of a reversal today in the dollar. Is it short-lived, or are we going to just go, through the roof here with the dollar? I don't know. All right. Anyone that says they do know is full of it. But what I want to do is try to identify levels where, something different could happen. So here we're looking at a weekly chart back to 2008, parallels based on the 2008 and 2011 lows, right? You can see this parallel off of these highs here helped us identify the lows actually in 2021. I wrote about this last night. Unfortunately, I kind of turned bearish. I was bullish the dollar down here and turned bearish kind of at the end of last year. And clearly that was not the right move. It's been a very confusing market for me in terms of the dollar, right? So for like the last 50 years, essentially since the end of Bretton Woods, we've had inflationary environments have been typically associated with a declining US dollar, right? You think about rising commodity prices. What are those priced in? Dollars, right? Deflationary environments tend to be a strong dollar, right? Everything goes down, the dollar goes up. Think financial crisis, for example. So we have had a commodity boom, yes, but somehow we've also had a massive dollar boom. So it has been a environment with which I have not witnessed before. It's been a bit confusing, but all we can do is really stick with price, stick with the charts, and we traded to the highest level in the dollar index since 2002 yesterday, and we are reversing some of that right now, right? Again, I will run my scans here at the end of the day and see. We're probably going to have some pretty big volume reversals on a daily basis, probably not a weekly basis, right? Because the dollar is going to end up pretty big this week. So, we'll see what happens next week with that. But I have a question here already about yen. We're here. Oh, see, all right. So this is what I'm talking about. Stefan asks, what do you think about yen? We are hearing chatter of 160 by the time this repricing is over. So we will get to that. Right now, I'm going to look at dollar index and throw out some levels. So the next big level to pay attention to is probably about 104.70. Okay. And again, don't know if we get there, but if we do, that's a spot to pay attention to. Why? Because that's a parallel that crosses the high here from March of the COVID high, if you will, right? So that's where I'm looking. And unless we get evidence to the contrary, which, like a 5-wave decline on a short-term chart, something like that, that's really where my focus is as far as fading this big move. Now, I will say that, or point out that we have made a new high, right, in the dollar index. However, if we look at euro, we have not made a new low yet. All right, and this was, you can see here, I talked about this last week. This is my wave count, which might be going out the window here pretty soon. In fact, this would not be valid anymore because we broke this low. Anyway, this is terribly bearish looking for the euro, right? So the sentiment, all that aside, just looking at the chart, you've got a 3-leg triangle here, and it kind of reminds me, if I go to dollar Swiss, I'll come back to euro, so bear with me. But if I go to dollar Swiss, kind of reminds me of this over here. All right. That 3-legged triangle ended in 2010 and then fell off the face of the earth, right? That is what this euro chart looks like to me. So again, with the extreme sentiment that we have, it is very difficult for me to chase euro weakness, dollar strength here psychologically. Do we come back and kind of get a retest of this resistance, right? Former support, and that would be back near like 108.40 or so, maybe. If just looking at this chart, not thinking of anything else, that's kind of where my head's at. Looking back towards, 300 pips higher, and then possibly getting a bigger breakdown from there. I don't know. You take it day by day. We'll see. But, gun to my head right now, I think you've got to be a dollar seller here, just given, again, the massive, insane, extreme sentiment that we have towards the euro and, bullish on the dollar. All right. So let's move to pound. And don't worry, I will get to yen here, which we had the question on. But as I look at cable's a very interesting one for the simple fact that you have this trend line that we've reversed off of here. So again, this goes back to the 2015 high, all right, 2018 high, 2019 high, and we nailed it yesterday. And again, we are reversing higher today, right? So, based on just kind of line in the sand here, hit big support, I think you've kind of got to look higher near term on cable. And that's kind of, the only thing I'm going to say regarding cable here. This is support until it's not. I like it higher near term. Kind of zoom in and see, spots where you might want to pay attention to. I'd look kind of this area here, which is, 127.80 to 127. Again, that is, 200 pips higher from here. So talk about these big ranges and these massive moves, kind of zooming in and looking for areas where the market might react. And we've hit one. We hit one yesterday. This was in last night's report. But again, looking up towards this midpoint of this big collapse here, and then, reassess. All right, dollar yen. So we talked about dollar yen weeks and weeks ago. We broke this massive trend line. The implication, clearly bullish. I did not think we were going to go this high this quickly. If we look at the very long-term wave count, right, all the way back to the 70s. 1, 2, Elliott 3, triangle 4, 5, A, big triangle B, higher in a C wave. So Stefan or Stephanie, I'm not sure if I'm pronouncing it correctly. I'm sorry if I'm not, says, what do you think about yen? We're hearing chatter of 160 by the time this repricing is over. So I'll say that the first level to pay attention to is going to be up here at like the 1998 high, which also intersects the underside of this trend line. And that's going to be, call it like 148, right? Before that, you're looking at 135, which is going to be the 2002 high. But again, from here, it's very difficult for me to, look towards that level right now. I'm going to bring up just some momentum readings here. So, all right, dollar yen. Let's go to a weekly chart. Okay, so RSI, we're looking at a weekly chart. Week's about over. So let's just say, argument's sake, that we do finish above 88 RSI, right? The only other time that happened was back here in March of 2013. Now, again, that was definitely not the end of the move. But something similar here would make sense. Over the next few weeks after that 88 RSI reading in March of 2013, you did have like a 400 pip drop, right? Then you had another run, consolidation. That would make a lot of sense here, in my opinion. So like 131.25 is what we printed here, I guess yesterday. Even if you pull back to this old high, you're looking at like 126. So that former high, 126 from 2015, I'd look for that to provide support, right? So former resistance, watch for support, and then see if you can kind of get a retest on the breakout level and go higher. By the way, while I'm on this RSI chart, check this out. Hold on. So here is pound, and yesterday on daily RSI, we printed sub 19. And again, the term overbought and oversold is kind of useless, right? In bull markets, the market stays overbought for extended period of time. In extreme bear markets, the market will stay oversold for extended periods of time. It's useful, however, when you have absurdly extreme momentum readings on RSI. So if you can see the magenta little dots here, right, that is RSI being below 19. So here, right, printed yesterday, you can see back in COVID low in 2019 or 2020, excuse me. This was the October 2016. That was kind of like a flash crash in cable. Interestingly, we didn't even get that low of a reading during Brexit, but you can see all the readings are highlighted here when they were that low. And for the most part, you did get a pretty decent bounce afterwards, at least, right? Some were big lows, some were not, but for the most part, you had pretty big bounces. Right here is 2012. The caveat to that, of course, is the financial crisis. Right? At that point, you went, I think RSI went down to 12 or something. So, is that possible now? Of course it's possible, but looking at the weight of evidence, I would not think that that occurs. So, point being is that going back, 30 something years and all this data, the only time that you really did not get a massive, snapback rally from a reading this low was during the financial crisis. We've got another question here. Could you please discuss Bitcoin in the short term? Absolutely. We'll look at that in a little bit. Let me get through FX here first. All right, so let's move on to take a look at Aussie. Okay, so Aussie is still dominated, if you will, by this massive channel, right, back to the 2011 high. In fact, we tagged it like perfectly on that high in April. And again, I got kind of in trouble from an analysis standpoint, thinking that we were going to try to break that because we had broken this little trend line here. And I was looking for a retest and a hold, and we did hold it, but for 2 days, and then the market completely fell apart. So what I'm telling you is pay attention to essentially these lows down here, this floor, call it 69.90 or so. It's also this parallel. You can see the cross, it was resistance in 2018, it was resistance in 2020, and it was support essentially throughout last year and early this year. So that's your big spot. Now look, this is bigger picture stuff, but clearly the market is moving, quickly. So if we do break that, then it becomes resistance again. And the level you're looking towards is a 618 retrace from that 2020 low, which is all the way down 64.64. And it's also the center line of this entire channel. So essentially just follow these parallels and trade into them as support. If it breaks, then watch it to provide resistance. Hold on for 1 second. All right, moving on to Kiwi. So the way this momentum is going with Kiwi, again, we are at a pretty solid level here in terms of near-term bounce or consolidation potential. However, the big level on the downside is like 62-ish. That's the low from 2015. It's also the 618 retrace of the rally from the COVID low. All right. Aussie's a little clear for me at this point in terms of picking spots to trade into. But Kiwi, my point is if you don't hold this, right, the top side of this blue trend line here, then this is kind of your magnet, 62-ish. All right, dollar CAD. Look, still have the massive double top potential. However, these highs up here surrounding 130 and also VWAP, volume weighted average price from the 2020 high, all surround that 130 level. That's a huge level. I would think if you trade into that, that's kind of a level to fade. And I'll kind of leave it there. However, if we look at this from an Elliott perspective, if we look at this as a big A wave and then kind of a big consolidation B, you're thinking maybe a C wave higher, potentially all the way up towards 136.50 or so. And again, these are just, possibilities. The fact that I'm even talking about them and considering them probably means that the dollar is going to pull back sharply, in the near term, but that does not change the possibility of having these bigger moves later on, okay? All right, so let's go. We had some questions on Bitcoin. Let's move to that. All right, so Bitcoin. Oh, sorry, Bitcoin near term, lost the sound for a second. Bitcoin near term. I'm a bear here. Again, just the massive kind of blow off top that we had, right? Big double top. We are nearing, kind of a breakdown level, right? If you just look at this as a big drop and then simple technical analysis, kind of a flag, right? Drop, midpoint, consolidation, break. So this to me would be kind of your breakdown level. Let's call that, where those lows are, about 37,700 and kind of looking down toward, let's call it 25.6. But ultimately for me, kind of the big test for Bitcoin is probably the high from 2017, which is going to be just below 20,000. So the question here was about, Bitcoin in the short term. I'm not sure how short term you're thinking, but I'll do my best. And this kind of jives with what I'm thinking on the dollar generally, right? Is that you've got a 5-wave move down. This might be a flat in the works, right? A, 3 waves down, B. Implication being that you rally, take out this high, put in another top up here, and then come off. So it'd be something like this, right? And then back down. If we take a look at Ethereum, it's going to be pretty similar. Remember my crazy forecast for Ethereum was that we were going to drop down towards like 1,000 in the first quarter. Obviously, that did not happen. We did drop sharply in January down to 2,200. But look, very similar here to Bitcoin in the sense that you've got a big leg down, kind of 3-wave corrective rally, failed, by the way, right at VWAP from the high. We're currently trading just below 2022 VWAP. And the test for Ethereum is a bit lower than Bitcoin. Bitcoin's about there. For Ethereum, you're looking at the line that connects these lows, and that's going to be in line with that September low. Let's call it 2650. So that's kind of your make or break level for Ethereum. And the big test, I think, still is this big channel, okay? And again, if it happens quickly, then you're looking below 1,700. If we, kind of meander sideways for a long time, it might be higher. But that doesn't change the idea that this is everything since basically May of a year ago, May of 2021 is a big fourth wave, right? Dama says, thanks. You are quite welcome. And I don't know, maybe this is kind of the tell, in terms of the dollar and, quote unquote, risk on, risk off. Ethereum might be the clear, or at least to me, the clearest, cleanest, longer term chart from a wave count perspective, right? Everything here being a big consolidation 4, look for that parallel support whenever it hits, right? Again, it could be quick or it could, be sideways for a while, but eventually when that puts in that 4th wave low, we go on another run. Alrighty, let's move on to some metals because we are at some pretty interesting spots in terms of gold and silver. So we did talk about this a lot over the last, couple of months. But when we had that huge emotional run in gold and silver, gold in particular, right? Everyone was like, calling $5,000 gold, blah, 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 my thinking at the time was that this is just too emotional, sentiments too extreme. We need to put in some time here and consolidate before we can go higher again. And we've done that. Again, we put in that high in early March. So, not quite 2 months later, here we are. And I wrote this last night. We have hit basically the first spot that I'd be interested in buying gold again. It's that first or that former high, November high, right? Put in a nice little key reversal. We followed through today. near-term resistance is going to be about 1940. However, the big spot, if we don't hold this low, is probably going to be, let's call it the 200-day average there, about 1834, right? I don't know if you can see that, but that's where that 200-day average is. And that's also, by the way, close to 2 legs down from the high. And importantly, let's see this blue trend line here back to the 2018 low. So that's really the huge spot to hold for gold on a longer term basis, right? So we'll call that, 1825, 1835. That's the huge zone. Again, on a very short-term basis, I do like gold higher, probably 1940, and then see what happens. Silver, not all that positive on it at this point, considering we broke out and failed to hold it. Again, you have like a failed breakout, kind of call it a bull trap, if you will. We are testing the line off of lows back to December and February. If we don't hold that, silver is in trouble, and we might end up seeing something along the lines of where silver trades to lows below the December 2021 low, but gold does not, and you'd have a big non-confirmation, and that would be your next buy signal. So again, that's not a prediction, just kind of an observation and thinking of what may happen moving forward. Doke. That, for me, is about it. Again, the big thing moving forward to next week, frankly, pay attention to Ethereum, right, which is on a longer-term basis extremely clear. But this Euro chart, I mean, this looks like an absolute dire situation for the Euro, right? On a longer term basis. That's not to say that over the next, call it, couple of weeks, that you can't, again, put in some consolidation to kind of relieve near-term sentiment and come back and test this level, right, as resistance, former support, watch for resistance. And again, that's going to be about 108.50, 108.60. But then, I mean, this just looks brutal. And, for the sake of argument here, let's take a look and see where objectives would come in if we do it on percent basis. If you're looking at 85, right? If you do it just on a pips basis or arithmetic basis, that actually comes in at 81.25, which is basically the low from 2000. So again, am I saying that's going to happen? No. Am I saying that we have a consolidation here? It's gone on for 5-6 years, and we've resolved it to the downside? Yes. I don't know. Interesting times to be sure. So I don't know. Near term, again, just given the sentiment extremes we've had, and frankly, some levels too, right? We've got DXY at those 20-year highs. Euro's not yet. You do have a non-confirmation in place then. I am thinking that we do try to rally in Euro, come off the dollar a little bit over the next couple of days and weeks. But then I do think that you have to be looking to short up here if if we come back and test it. So that's about it. Again, thank you very much for attending the webinar, and I wish you luck in these volatile markets. Again, Jamie Saettele here for Scandinavian Capital Markets and SB Trade Desk, signing off. Take care.